Now look, take a careful look at the risk tolerance. The risk tolerance itself has a certain width, okay? It's not just a line, it has a width, okay? As you can see, I have a risk here that touches from this area. I also have a risk here that touches from that area. The width of the risk tolerance means that in a certain level, we can hit the risk tolerance, but management will say, stick with it, don't pull out. This is taken from the stock exchange market. You know, the stock comes down, not everybody ditch, right? Not everybody sell immediately. They stay. Some of them will sell, but some of them will stay. So we have a width of the risk tolerance. The total risk of the organization is the multiplication of the threats times vulnerabilities, which is the probability that we saw, and the asset value, overall assets value, which is our impact. Do you see that? Do you see the formula, the risk formula here?
Yeah.
All right. So if we control this part, vulnerabilities, and we bring it down, we bring down the total risk, right? This is a given situation, we don't control it. This is a given situation by the organization. So this is the area we want to control. How do we control it? Controls, physical, administrative, and technical controls. All right? Now, take a look at this risk here, this yellow dot here, all right? Shachar, are you with me?
Yes.
I know that you're writing it. I love it, but I just really need you to focus on this. Take a look at this yellow dot here, right? When I invest in bringing down its probability, I maybe invest in, I don't know, more redundancy or more whatever. I invest in it. That's why we call it control gap. I mitigate the gap. Okay, I invest in this risk and I invest in the controls that it had. See how the impact is not changed, right? The impact, the asset value is still the same, but the probability is down in such way that this risk now is in the risk acceptable zone. Okay, the risk appetite zone. Do you see that? Right? Again, the risk was here. We invested in probability controls. We mitigated the control gap that we had here. Okay, and we brought the risk down to an acceptable level. All right? So the residual risk that we now have is that total risk that we mapped up there minus the controls gap. So every single risk that we implemented controls in is taken under consideration to bring us down to the residual risk. And the residual risk is the risk that we monitor. Okay, we keep looking at it, making sure it doesn't increase more than what we can accept. All right? Sounds good, guys?